You're listening to Systemic Error Podcast. The failure was designed.
DC Insider warns a $2 trillion time bomb is about to blow up the economy, based on an article by Robert Reich. The AI boom is not a miracle. It is a concentrated risk engine, a bubble built into the economy. Robert Reich's warning is simple. The U.S. economy has become entangled with a handful of AI giants. Their borrowed money and investor faith that future profits will justify absurd present valuations. That is the context. The political question is who built this arrangement, who benefits from it, and who will be left holding the damage when the story stops working. The answer is not the market in some abstract sense. It is Oracle, Alphabet, Microsoft, Amazon, Meta, and the financial system feeding their spending spree. Their AI infrastructure bets are now large enough to distort the S&P 500, shape growth, and expose the broader economy to sector's hype cycle. Power sits with the firms, not the public. These companies hold the real institutional power here. They decide where the capital goes. They decide what gets built. They decide whether the economy is organized around productive investment or speculative escalation. The rest of the country is mostly forced to absorb the consequences. That is the central fact Reich points to. The AI boom is not a broad social project. It is a corporate concentration problem. A few firms are spending more than governments spend on major public functions, and the larger economy is being pulled into their balance sheets. That is not innovation as public progress. It is private leverage masquerading as national strength, debt, hype, and fragile authority. The borrowing matters because it reveals what this boom really is: confidence theater financed by credit. Oracle's debt is already brushing junk status. Emerson's bonds have been hit. Even SpaceX, which is involved in building AI data centers, is trading on junkish rates. The market is not calmly pricing healthy growth. It is beginning to charge for risk. That risk is not accidental. It is the predictable result of corporations racing to outspend one another while profits lag behind. When debt outruns earnings, the supposedly inevitable future starts looking like a bill that has to be paid before the miracle arrives. China exposes the bluff. The other pressure point is competitive, and it is brutal. Chinese AI firms are offering models that are close to the leading American systems and doing it for free or at far lower cost. That matters because it punctures the story that AI profits are guaranteed by American dominance. If cheaper Chinese models spread the U.S., AI giants do not get a clean runway to endless margins. They get margin pressure, slower demand for data centers, and a weaker case for all the spending built on top of those assumptions. The response from Anthropic and OpenAI is predictable. They want the Trump regime to block imports of Chinese AI. That is not a market solution. It is cartel behavior with a nationalist wrapper. Trump's government is the wrong instrument. Reich is right to note the political trap here. A government already hollowed out by Trump's incompetence and corruption is supposed to stabilize a potential AI crash. That is a grotesque proposition. The same political order that thrives on chaos, loyalty tests, and spectacle is being asked to manage a financial structure that depends on discipline, credibility, and restraint. But the deeper problem is not simply Trump. It is that an economy this concentrated gives any executive enormous leverage over the fallout. When private speculation becomes systemic infrastructure, public policy arrives late and weakened. Government is left trying to mop up after corporations have already socialized their risk. What this really reveals: the AI boom is exposing a familiar American pattern of private actors capture the upside, then expect the public to absorb the downside. If the bubble holds, the winners claim genius. If it breaks, they call for liquidity, emergency policy, and patience, while workers, consumers, and ordinary investors eat the loss. That is the political meaning of the story. This is not just about whether AI is overvalued. It is about an economic regime where a handful of firms can bend national growth around their own speculative bets. then threaten the wider public. When reality intrudes, the issue is not whether the bubble bursts cleanly or with a bang. The issue is that the country has allowed so much institutional power to concentrate in so few hands that a private investment cycle now looks like a national fate. You've been listening to Systemic Error. Thanks to Alternet for today's article. With the automated voice of John, thanks for listening.